All right, today we're talking about how to get into one of the most exclusive clubs in the world of finance. We're going to figure out what it takes to get past that velvet rope and step inside the investor VIP room. And that's such a perfect way to put it, isn't it? You see that phrase, for accredited investors only, and it immediately feels like there's a whole world of opportunities happening just out of reach. It really makes you wonder. So, how do you get on the list? Well, that's exactly what we're going to break down today. We're going to look at the actual requirements to get your name on that list, and maybe more importantly, what's actually waiting for you once you're inside. Okay, so let's pull back that velvet rope. What does the word accredited even mean in this context? Because it's not just some fancy label. It's basically a key that unlocks a completely different universe of investing. And it turns out, the rules for getting in are set by one main group. You can think of them as the gatekeepers, the SEC. They're the ones who decide who qualifies. So here's the official definition. At its core, the SEC is basically saying an accredited investor is someone who has the financial smarts and, the resources to handle riskier deals that aren't available to the general public, and to be able to take a potential loss if things don't work out. Which, of course, brings up a pretty fair question. Why all the gatekeeping? Why does the SEC create these barriers in the first place? Is it just about being exclusive? No, not at all. There's actually a very specific, and I'd say protective reason for it. And it all boils down to one word: protection. You see, public companies, think Apple or Amazon, they have to disclose everything about their business. Private investments, not so much. They have way fewer rules about what they have to tell you. So the SEC's rules are there to make sure that anyone playing in that sandbox has a big enough financial cushion to handle a worst-case scenario without it being catastrophic. So what does that cushion look like in real numbers? Well, the first way to qualify is through your income. You need to have earned over $200,000 a year for the last 2 years, and you need to have a reasonable expectation of doing it again this year. Now, if you're married and filing your taxes jointly, that number bumps up to $300,000. Same rule applies, you need to have hit that for the last 2 years. Okay, so that's the income path. The other main way to qualify is based on your net worth. You need to have over $1 million in assets. But, and this is a really crucial detail, that calculation excludes the value of your primary home. The SEC wants to make sure your investment capital is totally separate from the roof over your head. It's all about that protective cushion. So, just to recap, you've got 3 main ways to get that VIP pass. There's the high income path, the high net worth path, or a newer option, professional credentials. If you hold certain financial licenses like a Series 7, the SEC basically says, okay, you've got the technical know-how to understand these complex deals, even if you don't meet the high dollar thresholds. All right, so let's say you check one of those boxes. You qualify. How do you actually prove it? This is where a lot of people get a little confused. What's kind of funny is that you don't get some official, laminated, accredited investor card to keep in your wallet. It doesn't work like that. Instead, you have to get verified on a deal-by-deal basis. So every single time you want to put money into a new private investment, the company or person offering that deal has to confirm your status all over again. And the process itself is usually pretty straightforward. You find a deal you're interested in, the sponsor, that's the person managing the investment, will ask for proof that you're accredited. This usually means handing over documents like tax returns to prove your income, or maybe bank and brokerage statements to prove your net worth. A really common shortcut is to just get a letter from your CPA or a lawyer that confirms you meet the requirements. So, you've done the work, you've proven your status, and you are officially past the velvet rope. What's the reward for all that? Well, let's take a look at the exclusive menu that's now available to you. All of a sudden, your investment universe just explodes beyond the usual stocks and bonds. We're talking about investing directly in the next potential unicorn startup through venture capital, or becoming a lender through private credit funds, or even owning a piece of a skyscraper or a giant patch of farmland. So let's quickly compare 2 of these. With a private placement, you're making a really concentrated bet on a single company. With a private equity fund, on the other hand, you're buying into a whole portfolio of companies that are managed by a professional. It's kind of like the difference between picking one horse to win a race versus betting on the entire stable. Now, one of the most popular playgrounds for accredited investors is real estate. It's tangible, people feel like they get it. But the opportunities here go way, way beyond just buying a rental property or a public REIT. Because once you're accredited, you can get into things like private real estate syndications. That's where you and a bunch of other investors pool your money to buy something huge, like an entire apartment building.
You can also get access to specialized things like opportunity zone funds for potential tax breaks or private real estate funds that build a whole diversified portfolio of properties for you. And then we get to the true mystery box of the investing world: hedge funds. They have this legendary reputation for being incredibly complex, having high fees, and, of course, for their potential to generate some pretty incredible returns. See, hedge fund managers have this incredible flexibility. They're not just buying stocks and hoping they go up. They're using all these complex strategies. For instance, a long-short strategy means they might buy stock in Coca-Cola because they think it's going to go up, while at the exact same time, they're betting against Pepsi because they think it's going to go down. They can make money whether the market is going up or down. It's a totally different ballgame.
Now, after seeing that menu, it's pretty easy to get excited. I get it. But, and this is really important, getting access is only half the story. With all this new opportunity comes a whole new level of responsibility.
And I absolutely love this analogy. Just because you can walk into a fine dining restaurant and order everything on the menu doesn't mean you should. These private investments are less regulated, they're often illiquid, meaning you can't just sell them tomorrow, and they require so much more homework. Choosing carefully is everything.
Because at the end of the day, becoming an accredited investor, that's not the finish line. It's really just the starting line. It opens up this amazing new universe of possibilities, but it absolutely demands more from you as an investor. So the door to the VIP room is open. The real question is, what will you do once you're inside?